Mortgage rates continue to rise. The 30-year fixed-rate mortgage hitting 7.49% on average last week. That's according to Freddie Mac data just out today. And it's a 23-year high. This coming as mortgage applications have ground to a halt. According to the Mortgage Bankers Association, applications there dropping to the lowest level since 1996 as that rapid rise in rates pushes potential homebuyers out of the market. Joining us now, Redfin CEO Glenn Kelman. Glenn, tell us, when is the dam going to break here? What is going to change these dynamics?
Well, I don't think we're going to get a major break in the action until the Fed lowers rates, and that's unlikely to happen in 2023 or even in the early part of 2024. So this is different than other housing market downturns. In 2008, there was massive distress. People didn't want to sell, but they had to, and that brought prices tumbling down, both through foreclosure and short sales. This time around, it's a standoff. No one wants to sell their property. No one wants to buy a property. So sales volume is going to stay low for the foreseeable future.
Yikes, Glenn. This is sounding grim. Here's my question. As mortgage rates, though, they keep going up, Glenn, at some point, would you expect home prices to start falling here meaningfully?
Maybe some. So far, that trend hasn't happened. Inventory is down 15%. We have seen an uptick in listings just in the past few weeks, so maybe that'll show up in broader industry-wide numbers later in the quarter. And if that happens, then we could see some softening of prices. But right now, there just aren't enough homes to buy. And if I had to say where we were more short, it would be on the supply side, not on the demand side, although both are really down.
None of this is news that Josh Lipton wants to hear, Glenn, unfortunately. Yeah, Josh has been looking for some sunnier news on this one. Talk to me about sort of the different tranches of the housing market, because I'm curious how this is playing out with starter homes versus higher-end homes, et cetera, or is it kind of all in the same boat right now?
It's fairly broad. I would just say that well-priced homes that are turnkey are still selling. So if the property needs some work, that's unlikely to appeal to someone who has already maxed out because of mortgage interest rates. And so we tell people to really get the property fixed up. And that's another difference between now and 2008. In the last downturn, people were really buying on square footage alone. This time around, the sellers are really trying to gussy up the house to make it look good. At the lower end of the market, it's a better market. At the high end of the market, we're really seeing properties sit for a very long time.
Yeah. Glenn, we're talking about the housing market nationally. I'm also curious, though, regionally, Glenn, as you look across the country, are there regional differences that are worth noting?
Sure. So Chicago is doing better. Florida is doing better. Texas has mostly been doing better. It's the West that's really struggling, and especially Oregon and California. People are fleeing high-tax states, and that trend has mostly not reversed. In Washington state, there has been a change in the weather just because some people are being brought back to Amazon and Microsoft. There are also people who feel alienated by the politics of Texas and Florida and want to come back to a more left-wing state. So for the first time, we are seeing some people coming back to coastal markets, but mostly the damage is concentrated in California, where it's really been a problem for the past 4 years.
And Glenn, we were joking about this being a bummer for Josh, who's looking for a house. I mean, it's not great news necessarily for your industry either, right? Redfin suffering amidst this to some extent, although your stock is up on the year. Are you all also looking for this turn in the housing market?
Well, you have to build your business for the economy you're in rather than hoping for a different one. So the only way Redfin is going to grow is by taking market share. So we're drawing visitors away from other real estate websites. We're getting more people to ask for tours as a result. But the problem is that once those people see how far their money goes, many of them change their minds. So we just need to drive that through to a sale. And at some point, we're just going to need some help from the overall economy. And it's really a tragedy at a generational level. At this point in their trajectory, baby boomers owned more than 30% of national wealth, whereas millennials own less than 20%. 1 in 5 millennials believes he or she will never own a home. And so I think we're just in a situation where sooner or later, government, the Fed, society as a whole is going to have to decide that housing is really important to the economy and that housing is really important to family formation and society overall. And so it's a basic human need at 4 million units instead of 6 million. Redfin is still going to take share. We're going to be just fine, but it's more competitive than ever. And maybe one other change that's interesting to me is just how price competitive real estate agents have been. I mostly have felt that this industry is completely resilient or resistant, excuse me, to change. But over the past 6 to 12 months, I have never seen more discounting among traditional brokers than now. So that coupled with some class action lawsuits in Illinois and Missouri and other big changes threatened by the Department of Justice means that this whole industry is up for grabs in an exciting way that I haven't seen since starting at Redfin 18 years ago.
Glenn, my last question to you is, who is actually buying homes, though, Glenn? Do you all have data and insight on who is actually getting the deal done and moving into new homes? Who's my competition, Glenn? That's what I'm asking.
Well, Josh, didn't you relocate from San Francisco to New York? Is that why you're looking for a house?
It's great memory, Glenn. I did. I'm here in New Jersey, and it's brutal, Glenn. There's no inventory. You hear limited inventory. It's what my grandma Minnie would call bupkis. That's what's out there, Glenn. There's nothing. And affordability, as you know, has been crushed.
I had no idea you were Jewish, Josh, but you are one of many people who are relocating across the country. So about 18% of our customers used to be relocating, and now it's 26%. So aside from death and divorce, which is always going to be one reason people trade homes, the other big issue is that there's still unfinished business in America where people want to leave one state for another, often to flee taxes. And so as a result, we are still going to see this millennial generation want to have kids and buy houses for their families. We're still going to see this relocation. There's a bunch of social forces that are driving significant demand. It's just sidelined right now by rates. The rates are sidelining the inventory, and the rates are sidelining demand too. So it'll be a standoff.
Glenn, thank you for stopping by today. Always great to see you, my friend. That was Glenn Kelman.